Let's talk money.
Hello and welcome to another edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. A lot of you have been writing into us, sending us questions not on mutual funds or on fixed deposits or any of those traditional investment avenues, but unlisted shares. And that really got us thinking that the information flow is real. Everyone is aware of a lot of the newer products that are out there in the market. And now with the tax changes in Budget 2024, perhaps a lot of investors are giving unlisted equities a serious thought because taxation has become favorable. But the question is, should you look beyond the FOMO? And are you equipped with all the knowledge that one needs to dabble in the world of unlisted equities? Are you aware of the risks that could be at play? Well, this is a classroom, so hang in there and listen to every word that our guests have to say, because while this could be a very exciting journey, it could also be a risky one, so beware of the risks. Let's straight away dive in. Our guests on the show today are Deepak Shenoy of Capitalmind, and here in the studios I have with me Pranab Uniyal, who is the Head of Investment Advisory at HDFC Securities. Gentlemen, great to have you with us on what's a really hot topic, right? Because these days, even, some of my friends or my younger cousins, they'll say that, hey, what's happening, and can we get Swiggy in the unlisted market pre-IPO? I want to buy the next hot stock. And that really got me thinking that this is serious business. It's serious money that we're talking about. But perhaps it's a cool thing that people want to latch onto, right? And I just want to sort of give a sampling of the questions that we're getting on Twitter as well, Twitter or other social media platforms, X and the other platforms, before we get started, gentlemen. So let's just put this out. We put up the tease, and then, Deepak was reposting about it as well. And we were flooded, our timelines were flooded with questions about where do we stand versus VCs, and, what are the right kind of companies to invest in or not? Are valuations better if you buy unlisted stocks? So great questions. Hang in there. The experts are going to answer each and every one. Gentlemen, opening thoughts. Deepak, let me start with you first.
Thanks, Surabhi. I think the unlisted space is interesting in the sense that it seems to have become the new Bitcoin in a way, because it's this new shiny object that seems to be around. But it's been one of the oldest forms of investing, right? So your friend starts a company, takes some money from you, gives you equity in your company, and then hopes to grow it to a large size. He could take it to you from you as debt. He could take it from you as equity. Debt is something that he will return the money at some point. If it's equity, then you grow with the company. Hopefully, he takes it public at some point or sells the company, and you earn a profit. So unlisted shares, as an asset class existed for a while. It's just that because there are new startups that are starting to list on the exchanges, and people who've got unlisted shares at the time when the company was not listed, after the company lists, they get this big profit, which is potentially what's driving a lot of the action here.
No, absolutely. Pranab, your thoughts. And you talk to a lot of affluent clients, right? UH&I. Earlier, this was the playground of the rich and famous. But now, like I'm telling you, that people who are viewers of the show, who typically would invest in mutual funds, they also want a piece of the action. Yes. What are your opening thoughts?
No, further to Deepak's point, unlisted for us is basically broken into two parts, right? One is the VC early stage part, where obviously these guys need the funding, and that funding could come from VCs or angel clubs, etc. The other is what we call the crossover, which is pretty much the pre-IPO part, right? So these are two different clubs or two different groups, and unlisted pretty much talks or covers both. So to your question, absolutely. I think there has been a lot of interest from all investor groups for unlisted. Hitherto, it's been limited, or it was restricted, or exclusive to the HNIs, UHNIs. But slowly, the transactional sizes are getting smaller, which allows a lot of people with 5 lakh, 10 lakh rupees to actually be able to invest in such stocks. And because of the awareness, because I talk to a few people talk to the other people. So and we all know about the appreciation in some of these unlisted stocks. So that's really caught the frenzy of the investing world.
Oh, absolutely. So while there is a frenzy and this FOMO, I think we need to know the basics as well before we get in, right? And anyone who wants to invest. So we're starting with the brass tacks questions. And the first really being the features of this unlisted security, whether it is exactly the same as any company issuing, listed public company issuing shares, or could there be differences here? How do we understand this as an equity instrument, first of all?
Sure. So ultimately, it's common equity, right? Unless it is, let's say, something like a preference share, cumulative, compulsory convertible preference shares, all kinds of convertibles, right? The point is that what you see essentially in the listed market is pretty much common equity. What you see in unlisted world is mostly common equity, but sometimes some of these convertibles also trade, right? So you have to be careful in terms of what you're really buying. And then, of course, there's the fact that we also can't take away the opportunities that the unlisted world provides, right? There are a lot of stocks, a lot of companies that you simply can't find such and such industries in the listed world, right? We have the world's biggest exchange in terms of turnover, being traded in the unlisted world, right?
Which is the National Stock Exchange,
Absolutely,
NSE,
right?
yeah.
Right. So those opportunities, while you can find similar, let's say, listed stocks, but this stock or this exchange that I'm talking about is unique in its own right, right? So you will get such opportunities only in a listed world that will draw a lot of genuine investors' interest. However, further to your point, you have to be careful about liquidity, right? Because if there was one thing that is paramount, should be on top of investors' mind in terms of what to expect from this world is the liquidity, right? So you have to be careful. The stocks can actually really go rampantly up and down depending on the liquidity or rather the lack of it. You have to be careful about and again, this is very unique. Because it is ultimately the transaction is not on the exchange, right? Transaction is across two counterparties.
Yeah.
So if I am buying it from you, there is no exchange involved, there is no guarantee involved, right? So there's a credit risk to that extent.
Yeah.
If I want to buy a stock at, let's say, 100 rupees from you and we agree to that, right? Before you actually wanted to transfer me and suddenly, let's say, for whatever reason, the stock went up to 125, right? Now, you may be tempted to probably not sell me, in which case, what happens, right?
Yeah.
Having said that, these are some of the risks, but it doesn't take away from the fact that right now it's working on almost like a well-oiled machinery. There are a lot of market participants, a lot of intermediaries, which have made it far lesser risky than probably what it used to be 3-4 years back.
No, absolutely. And we'll come to some of those mechanics. I want to really get into the issue of exactly how to buy, whom to buy from, and how to sort of prevent yourself from any potential traps. But before that, Deepak, come in on the point on just understanding the instrument that we are buying, even if it is common equity, and also where I as a buyer will stand in the hierarchy of investors. Because there could be the smarter guys, the venture cap guys, or private equity, all of that. So does everybody have equal rights? How do I know exactly what is this this piece of equity that I'm buying?
Oh, yeah. I mean, in fact, there's so many nuances here. It's no longer as simple as listed equity where everything is the same, right? So first of all, you have two types of companies, a private limited company and a public limited company. A public limited company can be unlisted. The difference is number of shareholders in a private limited company is limited to 200. So you may, there are other rules that apply. And then a public limited company has more open ownership. They can have more than 200. There are certain other restrictions. In a private limited company, they can actually say that the board of directors can refuse to transfer shares. So you own a shares of a private limited company. You want to sell it to me. The board can say, well, I don't want Deepak Shenoy on the cap table, so I'm sorry, you can't sell it. So they can do that in a private limited company. In listed companies, you cannot do this at all. So public limited companies are somewhere in the middle in this case. There is also the aspects of what share you're buying. Like Pranab said about the shareholding of common equity is basically the equity shareholder who's like at the bottom of the heap. Everything else is above that in the sense of other shareholders may have more rights than you. Common way to do this is CCPS, a compulsorily convertible preference share. But the preference shareholding has certain rights attached to it. There are four things that I'll talk about. One is that if it's a private, if it's an unlisted company, CCPS, which is above a common, can say that, listen, I'm giving you 1,000 rupees, but if the company's valuation falls or is the same, I will get my 1,000 rupees back first, and then my percentage ownership in the company will participate in any sale. So the company is sold for roughly the same valuation. The VC gets their money back first. You may get a lot lesser back if you own common equity shares.
Okay.
Then there are things called ratchet up clauses, which means if you sell at a lower valuation than they invested, their shareholding goes up. Consequently, your shareholding will also go down. There may be a right of first refusal saying, if you want to sell your shares to me you have to go to the VC first and say, will you buy my shares at the same price Deepak wants to buy it at? They can say, yes, I'll do it. In which case, I don't get to buy those shares. They can buy those shares from you. So all of these clauses are parts of shareholder agreements. And the person you're buying it from, you need to actually ask them about the capital structure of this company. And then if you buy, the common equity could be 1,000 shares.
Sure.
But then the convertible equity could be 100,000 shares. So you may be thinking that if I buy 100 shares, I have 10% of the company, but it's actually 0.1%.
Yeah. Okay, got it. So I think lesson number one is that ask all kinds of questions from the buyer with respect to the capital structure of the company, the nature of that instrument, any sort of hidden clauses, any lock-ins that might be accompanying, any conditions that might be accompanying those shares. Deepak, actually on that point, I just want to go back to some of the questions that we were getting on social media. I mean, Simple Tim saying that isn't the unlisted space inflated with VC money? So what's really the upside that I can hope for? Then Vijay Kumar was asking that question, saying that a lot of the VCs and promoters are actually now selling in listed public markets. So is this the best time to be looking at unlisted shares and, or is this just bull market phenomena playing out? I mean, in short, are these concerns valid? Should one be is the thought that in general, VCs will have the upper hand if you're getting into unlisted equity? Is there such a rule?
Two things here, Surabhi. First of all, I think we make too much of the fact that somebody else is making more money than us. The VC is making money, the promoter is making money. How can we make money? I think that's unfair to say because in listed companies, there was a listed company recently about 2 or 3 years back where the VCs sold. It was 2,500 rupees a share and they were selling. And you might have thought that, oh, the VCs are selling. But guess what? That price went to 8,000 rupees a share after that. The VCs were selling for a different reason because after a company lists, the VC becomes their worst enemy because the VC has received funds from their investors to take companies public, right? So they grow them, nurture them, take them public. But after they're public, they don't have a mandate to hold them anymore. So they have to sell. So they become the sellers. So all of these startups that list, they find these massive sales happening 6 months after they're listed because that's when the lock-in period gets over. Because all of these VCs and so on are trying to make deals to sell their shares over to somebody else because they don't have a mandate to hold them anymore. So in that context, you might actually get the company cheaper because they are being forced to sell rather than rather than it being expensive. Sometimes VCs will make money, sometimes they won't. I think we should consider every opportunity individually and not think that
not make blanket statements. Got it. So there's no sort of use of painting everything with one same brush. Got that point. So just be aware of your rights, be aware of where you are in the pecking order with respect to some of the other, perhaps more influential shareholders. Now coming back to the question of mechanics, if you do intend to buy, how do you buy, where do you buy, and what are the things to keep in mind? In fact, Radhika has sent us a question on this. This is a query on Instagram. You can remember, reach out to us on Insta as well. She is saying, does each unlisted company have a specific broker mandate? What is the minimum ticket size? Is there any lock-in period? How do I exactly buy? How do I get to know about the pricing? So all very relevant questions, and I'm sure questions that will cloud anyone's mind if they're a first-time buyer. Right. So let's go over the hygiene elements again, Pranab.
And Surabhi, for most of the things, the answer could be different for each company, right? For example, lock-in, right? Now, most stocks probably or most companies would not have a lock-in specified, right? But some companies would.
Right? Lock-in in the sense you can't sell the shares.
Yeah, exactly. So if I buy the share, if I buy the share from you, I can't sell the share for another year, right? So I should be aware of that, right? A lot of companies would not have. Then I talked about the nature of the instrument, right? Whether it's a CCPS, whether it's a share, and if it's a CCPS, and when does it or how does it convert, what ratio, etc. I should be aware of that. And of course, ultimately, it's almost like an OTC or bilateral transaction, right? There is no exchange. So if I want to buy a share or unlisted equity A, I know that you're selling. Both of us will agree on a price, right? On an email or otherwise would agree on a term sheet. Once that is done, I would transfer the amount of money to you, right? And as you receive the amount, you transfer the shares into my Demat account.
And typically, what's the best source? I mean, is it best to go to your stockbroking firm? But a lot of people are, now buying and selling listed shares on apps, so not necessarily even in touch with a physical broker, right?
Absolutely.
So then what's the first port of call?
And that's how it's evolved, really, right?
Yeah,
if you had asked me that question 3 years back, 4 years back, we would all be wondering where to buy from, because there were only a handful of players. Now this whole landscape is evolving, right? A lot of established brokers are actually now dabbling or getting into this business, which was again limited to a very unique set of players so far. But now, like I said, the ecosystem is evolving. There are a lot of people, your wealth managers will actually, for one, would actually be able to help you out with that. It's very important in such transactions to be aware of the kind of deal or the price that you're getting into, right?
Okay.
Because unlike a listed world where you can actually see tick by tick, here you'll be given a price. You have to ensure that, because ultimately it's all valuation, right? So you can't probably do too much of a fundamental analysis to figure out for yourself it's right or wrong, right? It is ultimately what is the price prevailing in the market. How do you find that out, right?
Yeah.
So the best way again to do it is, first of all, deal only with trusted intermediaries, right? People may want to or can build up to 10, 5, 8, 12%, whatever margin they want to. The best way to possibly avoid that is speak with a few people so that you can kind of average out and figure out what is the best price.
Yeah, I think that's a great point to keep in mind, because you don't have one publicly displayed price on a certain exchange.
Sure.
That's not how this market works. Fair enough. So we've got the basic groundwork in place now. The question is, what do recent examples tell us? We'll pick up some companies which are right now unlisted, shares are trading. Some of them are sort of, in demand. But does that really mean that, does that guarantee wealth creation over a long term? That's the question after a break.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week we are discussing a hot issue, the world of unlisted equities, and whether it indeed can be some sort of a guaranteed road to riches. We thought of taking some recent examples just so that viewers get an idea about the way unlisted shares trade, the way the prices move. So let's take this up. But I must say that there has to be a caveat that needs to be kept in mind over here, because there is no public clear market. All of the prices that you see on the screen, they will be indicative. These have been collated, through a series of brokers with HDFC Securities, a bunch of other market intermediaries, because there is no, like I said, official government platform or website, regulated website, which gives you the day's price on any unlisted equity. So let's take some examples. Of course, we would have all heard about NSE's plans to go public, to come with a IPO, right? So that's created a fair amount of buzz. And actually in the unlisted market, the NSE stock has done pretty well. It's up about 76% in the last 1 year. If you look at the others that have really performed well, SBI Funds Management, the anticipation that maybe SBI will do SBI MF will do a public listing as well. In the unlisted market, the stock's up about 100%. Tata Capital, Wari Energies are some of the better performing ones. But there's also red. That's what one needs to keep in mind. Look at Oyo. Oyo hasn't done too well. And if you look at some more examples here, this is B9 Beverages, or Bira Beer as it's more commonly known. It's down. And Farm Easy has definitely not been very easy for the people who've held on to the unlisted equity. But on the other hand, I mean, you've got some of the others like Cochin International Airport. Again, I repeat, these are indicative prices. We have no way of confirming or absolutely verifying that this is the prevailing market price, because there is no standard public price. This is not a public market. This is the unlisted market. And Pranab, therefore, my question to you, how does one, try and separate the wheat from the chaff and hopefully not get caught on the wrong side? How do you try and pick a winner in the unlisted market?
Right. So first of all, your intent has to be to make money from the company on a fundamental basis. Rather than, it's not an IPO where you invest before IPO, get an IPO pop and sell the same day, right?
Absolutely.
Because remember that these are illiquid instruments on a relative basis compared to a listed world. And sometimes when the company goes for an IPO, you would actually locked in for 6 months, right? So do not invest into overnight gains, right? Having said that, once you've decided, you've done your own analysis, you want to actually invest into that company, just ensure that you deal with the quality intermediaries, right? It's very important as well, because there are all kinds of people, fly-by-night guys, as well as very good quality established brokers, intermediaries, etc., which are into this business, right? And like I mentioned earlier, it's important to ensure that you're buying the right instrument. You're aware of the intricacies of the instrument that you're buying. And then, of course, the right price. You ensure that by asking 2-3 brokers and probably kind of triangulating on the price. And yeah, I mean, that's about it.
Okay, all right, makes a lot of sense. I think we have time to squeeze in just one last viewer query. We have Rohan joining us on the phone line. Rohan, welcome to the show. Tell us, what's your question?
Hi, my name is Rohan. I'm a big fan of Chennai Super Kings and want to become a shareholder after hearing that you can buy its shares. How do I go about doing this?
Okay, so big CSK fan. It's the Dhoni franchise, right? It's almost always hitting a home run. But let me toss this to Deepak. Deepak, interesting, right? One can understand CSK, the love for CSK. I'm a fan myself. But I don't know if buying the shares is necessarily a great idea. I don't know if you've looked at the company, tell us the fundamentals. And even otherwise, I mean, how, again, the same question. How do I ensure that I don't get burnt, even if I'm trying to follow my passion, which might be a certain cricket team?
Oh yeah, of course. I think Surabhi here, I'll leave the passion part aside because then no values, right? So if you love the company and you want to be a shareholder, then no price will stop you. But let's look at it from a perspective of saying you want to actually make money from this stock and you want to build your conviction on it. The fact that it's a great team may not mean that it's a greatly financially well managed company. So you'll have to look at the financial statements. Luckily, CSK actually has a lot of the financial statements on its website. The shares of CSK were actually demerged from India Cements a while back. So a lot of India Cement shareholders own those shares. And maybe some of them are willing to sell it to you through an unlisted market, through an intermediary, a banker or a broker. And you may be able to purchase those shares there. You have to be careful about the price because when they say 175 rupees, what does that really mean? If you go on their website, you download their annual report for FY 2023 because they haven't yet uploaded the one for 2024. They made only 38 paise per share at a consolidated level in profits. So you're paying like a 200 times or 500 times earnings, hoping that this will grow. But I believe now that this is a fairly well-established franchise. Yes, it could grow from here, as IPL will, but you'll have to temper your growth prospect thoughts to where CSK can grow and IPL can go from here. And of course, they've made investments outside of India as well. So perhaps they have those fledgling opportunities. These are questions that you might want to ask now, saying, how are you planning to list these shares? What are the future growth prospects? What can I get from the balance sheet that may be a red flag? Luckily, you have a balance sheet here and you have it easily downloadable. In every other case, I think you should be asking these tougher questions, saying how is the company going to continue to earn money? Is it loss making? How does it turn to profit and so on? Longer term, that is what you want to establish before you buy a company like this.
Absolutely. I think that's a great roadmap to be on to ensure that you don't get on the wrong side of things. Gentlemen, we are out of time, but not out of questions. This was a great conversation. I think a very, very timely one. And hopefully viewers who have tuned in, who watch this, are going to ask all these important questions before they decide to dabble in the world of unlisted equities. Thank you so much for your time. Great to have you on, Deepak, as well as Pranab. It's a wrap on this edition of Let's Talk Money. We'll see you again with another theme. So keep sending us your feedback, comments, and queries.
Let's Talk Money